All right, all right. What's up, guys? Matt here, Flex Trades. I hope everybody had a great Tuesday. I've got a watch list and a game plan here for Wednesday, January 12th, 2022. For those of you that are new to these, this is just kind of an in-depth kind of perspective, an in-depth kind of look into my trade theses, the trade ideas that I'm looking to take for the following day. I preach this a lot. I've said it a lot. Um, as far as trading goes, you really you make your money in the after hours. You make your money this time of day in the evenings after the market's closed when you're preparing and you're going over your game plan. And by the time the morning comes, by the time that alarm bell goes off at 9:30 Eastern, at that point it's really just clicking a couple buttons and respecting your risk. So that's what I'm doing here. That's what I'm taking the time to show you guys, my kind of thought process, what I do, how I plan, how I manage some of my risk, how I recognize some of these patterns, et cetera, et cetera. But this is where the money's made, guys. This is where I spend the most of my time, is in the evenings, after hours. I'll flip through 100,000 charts, whatever it is, and I formulate my theses. And then, like I said, by market open, it's really just a matter of clicking a couple buttons and respecting my risk in a robotic, emotionless type of fashion. And that's trading in a nutshell. But anyways, with that being said, I like to start these off broad market, S&P, broad tech, QQQ. Huge rebound over the last 2 days. We had a gap down to start off the week yesterday on SPY and QQQ, a larger wash, which I outlined Sunday evening, that if we didn't hold Thursday and Friday's low on SPY and QQQ, that there was a real possibility that we could wash down to the mid 450s. We pretty much got there. And then at that spot, we found huge demand, and we had a nice rebound from 456 up to 465 yesterday, and then a follow through today up toward 470. So really just a remarkable rebound, almost a 15-point rebound off of Monday's low. So I don't want to get overly bullish bias going into midweek here, but obviously the pattern over the last 2 days is pretty similar to the last couple times that we hit the 50 SMA, we washed under the 50 SMA, and then we had a nice hammer candle or two, and then really just a straight rebound afterwards. So conventional wisdom, you're looking back at previous history and you think to yourself, well, yeah, no brainer that this is going to go straight back up to 480 all-time highs within the next week or two. Don't get overly biased. That's really all I'll say. I'll kind of keep it at that. My game plan, the way I'm approaching S&P and QQQ over the next day or two, is still very much in the kind of digestive, ideally the digestion phase state of mind. So what do I mean by that? Maybe a little follow through tomorrow, but in my opinion, the best thing for something like the SPY or the QQQ at this point in time would be maybe a little follow through, but ideally a little bit of sideways. Same thing with tech, right? A rebound, maybe get up to the 50 SMA, and then a little bit of sideways. And if we can get a little bit of sideways and carve out, maybe 3-5 days, whatever it is, at that point, if we get a follow through out of any potential micro channel, that's when we could start talking about all-time highs potentially. But not going to get overly biased on the bounce here. Let's play it by ear. That being said, there's still a few individual setups that I'm eyeing, starting with Microsoft. I love the way that Microsoft's got this rounding bottom type of look. And I talked about this the other night too, right here and right here. I mean, come on. Like, is this not the same exact pattern developing? The only problem with this now is that there's going to be a lot of overhang in this area. In that 320, 318 spot, there should be a lot of overhang supply from these two lows here. So we had a couple lows toward the end of December. I'm sorry, the end of November, the end of December. You see that double bottom, very distinct double bottom. You can't miss it. Boom, boom, right? Double bottom. A lot of support there, a lot of demand. Well, guess what? At this point, if it bounces into that, that's going to be a very solid spot, in my opinion, where this should find some supply. Another word for supply would be resistance. So if we get up toward 320, I would definitely expect a little bit more sideways. So again, it kind of goes back to QQQ and SPY. And you can kind of see it on SPY too, right? You can see a little bit of overhang down here around, between 475 and 473. There's a distinct possibility that we can get a follow through up toward that level, but there's a decent bit of overhang there. And you can see that on QQQ as well. Same type of deal. There should be a little bit of overhang right around that 390 area from that previous low and that previous low here, right? So that's kind of what I'm eyeing on Microsoft. I'm not going to get overly biased. I've been talking about it for a couple days now. Voice crack, damn. A couple days now. We get up to that spot. It's really just a matter of being patient. So don't be greedy on the upside. You don't want to end up holding a bag on some of these options contracts. I mean, look, from lows, we're already 305 to 315. You're already talking about a 10-point bounce, right? Let's not be greedy. Let's observe the data as it comes in, but it's a solid reversal pattern in the making. I'm kind of thinking 320 to 323 or so is my maximum range to trim profits into. And at that point, I'm just going to, I'm going to be patient. Tesla, kind of the same, right? We had that big bounce off of that sub 1,000 wash from the other day, that rebound toward 1,100 now. Just being patient. I'm not going to get overly biased. There's no real game plan here, as I've gone over it over the last couple nights. That being said, 1,100, that's kind of the spot to break over the next few days. If we can trend up into that, I'm going to watch that break for a follow through up toward 1,150. BABA. This is the big one that I've been talking about for several weeks now. It's that multi-week, that multi-month bottoming reversal pattern. You can see, kind of wherever you draw trend lines, English, man. Wherever you can draw these trend lines, you can kind of get a sense that we're making some higher highs, some higher lows, and it's really just a solid reversal chart developing. The big spot was that 125 spot, which acted as a multi-week high. And once we broke through that and we retested it yesterday, we got down toward 126, 125 and a half yesterday, rebounded off that. So really at this point for me, the trade is kind of scaling into dips and using low 120s as my risk, 123, 122 or so. A more aggressive risk would be 120, but in all likelihood, if this gets down toward 122 or so, I'd probably cut it. But with that being said, today's candle following yesterday's candle, very constructive. It's a really constructive looking candle. We had a big move from 115 up to 135, that red candle yesterday. And then today we completely engulfed it. So the next spot I'd be watching over the last 3 days high. So call it 135. Call it 135. If we can break through 135, I don't see why we can't get a follow through up toward the upper 130s, maybe 140 or so. So that's kind of the game plan I have. Scale into dips, low 120s as my risk, and look to trim that position once we get into the upper 130s. DWAC, not much more to comment on. I posted this one earlier today when it was at about $58, and it had almost an $8 upside move from my initial post. I talked about this the other day too. You see this multi-week channel dating back to early December. A multi-week channel, very distinct low, very distinct high, that high right around 55, that low right around 49, 48. And then last Thursday, that strong candle that ripped right through it and it's hard to see because this candle was so big, but last Thursday's candle was an anomaly as far as volume is concerned. And then today's candle was also an anomaly as far as volume is concerned. It's going to be hard to get this type of volume again. That's an exceptionally high outlier, so I'm kind of ignoring that in a sense. I think something around this range, or maybe even up to here, is possible, but I don't think this type of volume's possible anymore. That being said, back on track. 55, huge spot. We broke through that 55 mark. We pulled back, had an inside candle, had a follow-through candle, which engulfed that inside candle. And then today we had a follow-through candle, which had a higher high than the previous three candles and higher volume. The next spot to watch is that previous high right around, I think it was today's high. I want to say it was 66.3. So call it 66 and a half, call it 67. The previous high, today's high, the previous high, that's the spot to watch. If we can break through that spot and we still have the same type of volume, I don't see any reason that this can't get back toward the previous high, which is around 80. So 66 to upper 70s or 80, that's a huge move, guys. That's a gigantic move. That's a very tradable move. That's a very, if you're looking at volume, it should be a very liquid move. But again, I think ideally we can have 1 or 2 days where we trend inside of today's candlestick and then head for an upside break. Something like that, right? Today's candle, nice volume, good look. But if we can get a couple inside days following today, Wednesday, and then again Thursday, and then bang, follow through that by Friday or Monday next week, that's obviously the most ideal scenario. Inside days are good. That's the take-home message. That's what we're looking for. Regardless, 66 is the big break to look for going forward. And at this point, my risk is probably going to be up toward 57, 58, upper 50s. Upper 50s would be my risk. GLD, short, sweet, to the point here. Let's pull back the 3-year daily chart. We could flip that to the weekly chart. This is just gorgeous. This is just, look at this, guys. Doesn't get much tighter than that across a multi-month, multi-year time frame. It just doesn't get much tighter than that. Spots to watch here, 127 and a half, and then the previous high, 175. Those are the upside spots to watch. I scale in again, kind of backtrack real quick. my positions, my core positions, always intrinsic value, in the money, intrinsic value. If by Thursday or Friday they don't make the move, I roll them into the next week. Just a side note, back on track. So with that being said, my risk on something like this is probably the recent low, right around 167 and a half. But I love the look here. LCID, I went over this one in chat room today, that $43 mark, big break. I could see this following through as high as up here toward upper 40s. But again, I think the meat of the move is over with. I wasn't super impressed with the volume today either. I think the volume was kind of lackluster given how, technically speaking, how big of an inflection break that was. But, you know, at the end of the day, chart data is chart data. I'm very much looking for a pullback and retest of that $43 mark. And then at that point, you know, that's where I'd be looking to scale back in for a trade. I've got a little bit of the position left. I'm looking to sell into pops and just patience for this to retest 43, maybe even washed out toward 42, lower 40s. Again, position in the money, intrinsic value. But continuing on, I mean, even just big picture speaking, over the next, you know, several days, if not weeks, this is a very solid setup in the near term. Really good look to it. I'm going to be paying close attention to this because if this can trend up toward 50, break 50, I mean, we're talking about all-time highs at that point. Very impressive comeback. And then last but not least, Boeing, excuse me, last but not least, Boeing, what a candle today. I said this a few days ago. I'm scaling into dips using 210 as my risk. Obviously, it hit my risk over the last couple of days, but with today's strong candle, I did take a starter back into this setup right around 212 or 213 or so. Again, kind of the same game plan that I had the other day. Obviously, it hit my risk. I had to sell for a loss, but I'm kind of right back to where I was talking about the other day. I'm looking for washouts. I'm looking for pullbacks. And I think I have a little more aggressive approach with my risk. So I'm going to extend my risk down toward the recent low at this point, which is around 207. But I love the way this is shaping up. I talked about it the other day. I mean, we had a multi-month drawdown, found a bottom, and then finally we've made a higher high. Now we're kind of channeling in that higher high. So if we can continue to do this for however long, and then we go and break that 220 spot, I don't see how this doesn't follow through up to the upper 220s. But it's a really solid multi-month, multi-year reversal pattern shaping up. I love the look of Boeing right now. But again, with everything here, I always have my risk in mind. I always respect my risk. And, you know, if you're watching this video right now, do the same. That's trading. You have a risk in mind. You respect that risk always. There's no emotions involved. There's no feeling sorry for yourself if you have to take a loss. It is what it is, right? That's trading. So with that being said, that's the game plan for tomorrow, for the rest of the week, for however long these setups stay as constructive as they currently are. But yeah, that's just a little inside look into the brain of me. I hope you guys got something out of it. Hope you guys have a great Wednesday. And as always, if there's anything new that pops up, I'll be sure to notify you guys. All right. I'm out. Peace, guys.